here, sponsored by GlobalFXClub.com. We just had University of Michigan Confidence come out, another miss. This morning we had other U.S. data misses. Retail sales and PPI were both misses. So we'll take a look at the reaction to that in a second. If you would be so kind as to read the risk disclaimer, that should now be on your screen. We will then get started. It was on your screen. It will be again on your screen in a minute. We'll take a look and see how everything is reacting to that. Alright, so there's the risk disclaimer. If you're watching the recording, pause it and read it. Just if you're right here, just skim it, and let's jump to the charts. Okay, so we have I have three pairs open right now: Aussie dollar, pound dollar, dollar CAD. Just what I'm keeping an eye on. Looks like based on these three pairs, somewhat mixed reaction here from the University of Michigan. Pound pretty much unchanged, Aussie rallying a little bit, and dollar CAD relatively unchanged as well. Again, it's Friday. The news releases on Friday often do not have a terrifically large effect, as a lot of traders have gone home for the weekend in Europe. Asia's gone for the weekend, and U.S. traders tend to take it easy on Friday. But we did have a lot of information thrown at us today, so we could see a fairly active U.S. session, at least until this afternoon. Around 1 or so, I would expect things to die down as they typically do. So really, again, I mean, whatever you guys want to look at, this is meant to be question and answer, so please put whatever pairs you have in mind in the box. There are some things that I'm going to take a look at, certainly, but for the most part, it's really whatever you guys want me to look at. So if you have questions, please put them in the box. Euro dollar to start. Great. A pair that everyone loves. Let's pull up euro dollar. I don't want to, hold on. I want to pull it up on this one. All right, so euro dollar actually is kind of a pain lately, which isn't surprising considering where it's sitting. But you can see from this putative double bottom here, right around 127.53, we've rallied fairly significantly since the 4th of April, so the past 8 days or so. We've now managed to push above these pink-oriented lines, our key daily moving averages. We have the 100, the 50, and the 200 in that order. So we're above all three of those. We pushed through that 200-day moving average. We just retested it, actually, the last 4-hour candle, and we put in a nice bullish hammer off of that 200-day EMA. So we could be in the process of starting yet at least one more move higher to test this daily cloud bottom around 132. Alternatively, if you want to look for a potential bearish setup, we have 2/3 of a head and shoulders formed. Certainly, it would really need to be a break of 130.40 or so to start getting some downside, but that is a potential setup. In terms of 4-hour moving averages, we have a golden cross occurring here with the 50-period EMA on the 4-hour chart pushing above the 200 EMA. So bullish developments there from the 4-hour moving averages. We've already crossed above the 100. So it looks like, you know, euro dollar could be looking to continue its move higher, but it's not as constructive as it could be. I would like to see some range trade here around 131 before it break higher to offer a cleaner setup for getting long. It's challenging to find a good long setup in this type of upward sloping channel. I watch these for breakdowns. Hard to trade them to the upside just because you don't get a great entry. But as we sort of turn sideways, if we continue to consolidate here we could see a nice opportunity to get long as long as we stay above this moving average cluster right here. So that's what I think about euro dollar. Hoping for some consolidation and then perhaps at least one more break higher to start the week next week. I think that could provide a very nice long opportunity, at least up until this 132, 133 range. Then we'll see how the pair handles resistance that we find up there. Aussie dollar. Okay, so Aussie dollar, you can see here we put in that 105 basically was very solid resistance once, twice, then we broke through on the third attempt. We've come back down to test it twice now. First we came right back down to it. This was on the spike lower following that really disappointing Australian employment data that we had earlier this week. Came right back down to test that 105 figure and rallied from there. We came a little, not quite as close to 105 earlier this morning, but so far we remain trading above that 105 figure. Moving averages are fully bullish, 5100, 200, 5100, 200. It will provide a good deal of support on any pullback. So really, as long as we stay above this 105 figure, risk on Aussie dollars clearly to the upside. The only, the one possibility that I do see that would be bearish is if we can break back down below 105, then move sideways for a little bit. We could see a nice large daily head and shoulders pattern form with this current price action starting to form the head. But you don't really want to anticipate that kind of pattern weeks in advance. That's just something to keep an eye on. So really right now I'd be looking to play Aussie dollar off of that 105 figure. And if we get back below 105, I'd look to try to get short for a move back down towards 103.85 or so. But this 105 figure should be absolutely solid support for next week. That's definitely the line in the sand, so to speak, for Aussie dollar is 105. What other pairs do you guys want me to look at? This is dollar yen. You can see that this one, the march to 100 has been interrupted. I have the high as 99.94, so 6 pips. We've stayed under that 100 figure for 6 pips. I would like a gap fill here, basically 97.50, and then or 96.70 for opportunities to try to get long on dollar yen. Fundamentally speaking, I'm not that bullish dollar yen, but for the past however long, it's been foolish not to buy the dips. So I'll continue hoping that that strategy plays out if this does turn into a larger dip. So watch this first gap fill here, 97.50. Coincides pretty nicely with the 38.2% fib. And depending how long it takes, we also might get the 100-period moving average up there as well. So that's where I'll be keeping an eye on for dollar yen. And then after that level, certainly these previous highs here around 90.50 or so will be the next level to keep an eye on for dollar yen. Other pairs, requests. Lots of pairs out there that I can cover. What do I think about a buy on Aussie at 105? I actually do. I like that. I do like that trade idea. The reason I really like it is because it lets you keep a really, really, really tight stop. So let's call. I mean, basically these previous highs are 104.98. So basically 105. So you get a long touching 105. You maybe keep a 20 pip stop. And if it goes higher from there, great. Look for 106. And if it takes your stop out, then wait and see if we get a 4-hour close here below these previous highs. And then you gotta flip your bias a little bit. But I do think if we do dip down towards 105, I would not maybe like to take that trade this week. But if it's very early next week, I mean, ideally, the ideal situation would be we actually gap lower towards 105 to start the week on Sunday. You can get long from there. I think that would be an excellent opportunity. You can keep a very tight stop on that. Your odds increase a little bit because of the gap. So yeah, I do like that idea quite a bit. It'll be something I'll be watching next week, depending on how, obviously, today ends. If we do see some sort of risk sell-off this afternoon, that might be negated. But as long as we finish this week above 105, I do like the idea of trying to get long at 105. Other questions, other requests. Pound dollar. All right, so pound dollar. You can see this figure, this level has been very important to pound dollar. Basically 152.50. I like pound dollar still to the long side. You can see that we had our 50 period EMA crossover, our 200 crossed over the 100 back here, and we have the 100 threatening to break above the 200. Daily moving average is still bearish, but we have pushed above this 50-day EMA here, and as long as we hold above that 50-day EMA, I like still a move up towards 155. It may take its sweet time getting there. Actually, really, as long as we're above 152.50, I like a move towards 155. The pair has been somewhat frustrating to trade lately. You can see we have these sharp spikes up, then lots of consolidation, then a sharp spike up, then some consolidation. So we may see another period of sideways action before another sharp run higher towards 105, which is this 100-day EMA here. Above 105, at 105, I will start my bullish bias, I guess. Will start to fade a little bit. I do still think that we could test this cloud top and this 200-day EMA here around 156.60. But I'm looking really for 155 still on the longs, looking for opportunities to get long lower, closer to 152.50 for that move up to 155. And from there, I'll have to sort of reevaluate and see what the pound's been doing, what the UK economy has been saying. As we get closer to the new Bank of England governorship, when Mark Carney takes over, I think it's July, we may see some interesting price action in the pound as people start to anticipate whatever it is they think Carney's going to do. So we'll see what we get until then, but I still like the pound towards 155. It's just a question of finding low risk entries to try to get there. Other requests, other pairs. This is dollar Swiss. Swissy still pretty well capped here by this descending wedge. These usually break to the upside eventually. It's just a question of when they do. I like dollar Swiss a little bit higher. A lot of moving average resistance on dollar Swiss here, but hopefully we start to resume that this bullish trend that we saw here. We're trading basically right on that 50% fib. So I think if we can break, we held this 50% fib, and now if we can sort of break this wedge, I think we may see some buying come into dollar Swiss and start to push it higher, maybe to resume this this uptrend that we've been in. Some of that will depend on the performance of the euro as well, in euro Swiss specifically. But so long as we hold that 50% fib, I like the odds of some squeezes back to the upside. Swissy pairs really can move when they want to. You can see here, starting on from February 1st to basically March 10th, we moved 500 pips basically without too much pause. So these pairs can really start to move, but sometimes they take their sweet time in doing so. What else do you guys want me to take a look at? You can also, it doesn't have to be specific pairs. You can also ask questions about trading setups, indicators, whatever it is that you want. I'm pretty much at your disposal. Thinkorswim, I don't use Palmer, so I won't be able to answer that question. Sorry. I'm not familiar with the software. The best way that I would say to do that, if there's no way that you can automate that order, is to set an alarm at that level. We're just really trying to keep you appraised of what we're going to do. Yeah, I would just set an alarm if you can't do it automatically. I'm not sure that all trading platforms have that option, but you can ask you can ask Thinkorswim tech support, and if not, just set an alarm and move it there. We're just trying to keep you appraised of what we're doing. Which one is a good indicator to start with as a first step? That's actually a very good question. I don't use eSignal now. First indicator, I don't really want to count moving averages as an indicator, though they are, because they're first indicator. I would say that you should start using the three major moving averages, the ones that I keep on my charts, 50, 100, 200, and sort of watch how price interacts with those key moving support and resistance areas. You can watch to see how crossovers affect the pair. So moving averages are helpful. This is an RSI, relative strength index. I use that a lot as well, but I use it for divergence purposes rather than overbought or oversold. That is also a good indicator to familiarize yourself with. The other one that I would say that might be worth looking into, that's fairly popular with new traders, is the MACD, which I used to use a lot more. I don't so much now. But there's a lot. It tells you a lot of information. There's a lot of different ways to use it, and you can find a lot of good MACD only strategies. Some of which are less effective than others. But it does give you a starting point. It's something to understand price action with. So those are the three that I would start with. I mean, I'm not a big indicator fan. I use moving averages and I watch RSI, but I don't use pretty much any other indicator. But those are the ones that I would familiarize myself with, and kind of go from there. Some people have a great deal of success trading with the MACD. I'm always impressed sometimes with how well people can use it. It's just never been my favorite. This is Kiwi. Pretty solid rally here on Kiwi dollar, which is putting it somewhat mildly. Watch these previous highs. 85.30 is the first one. The one that I'd really like more to keep an eye on, though, is this 84.80, basically. As you can see, it's been respected once, twice, even a little bit 3 times, and it's also now the 38.2. I mean, MACD isn't that confusing. There's a lot of elements to it, but they're pretty straightforward. You can find a lot of easy to understand strategies with MACD. You can also use MACD only the certain elements of MACD. Like, you can just ignore the signal line. You can just do crossovers. You can ignore the crossovers and just use the oscillator. So it's one that presents you with at least 3 different options to watch. And I mean, it's as confusing as you want to make it. You can keep it as simple as just buy when you see a crossover and sell when you see a crossover, or you can make it a lot more complicated. So I mean, it just depends on how much you want to put into it. The other thing is just don't use indicators to start, and just trade trend lines and price action. That's another option, and that's the easiest to understand. So here's an empty, a naked chart, so to speak, on dollar CAD, or sorry, this is euro dollar. You can see, you draw this trend line here, and you buy this breakout, and you ride it higher. Obviously, it's a lot easier in hindsight, but I mean, there are ways to trade without indicators that are actually quite simple and tend to have very good levels of success. Other requests? Yeah, I have objections to MarketScope. This is the one that I have open right now. I've used a bunch of other platforms. I haven't had a major objection to any of those either. I find it really just what you put into it. But yeah, I have no major objection to MarketScope. This is Euro Aussie. This is why sort of a great example of why moving averages are significant. You can see that on Euro Aussie here, we tested this cluster of daily moving averages back on the 5th of this month. We came up 3 times and tried to test it and failed every time and fell from the peak to the bottom just under 200 pips on Euro Aussie. Probably nothing in terms of Bernanke's speech on the dollar and its effect on the dollar. They're always listed as red flag events because it could have a major effect, but he's speaking before the Resilience and Rebuilding for Low-Income Communities Conference. He's very likely not going to say anything that's going to have a major effect on the dollar. But they always list it as important just in case he sneezes and accidentally says we're ending quantitative easing tomorrow. But he's almost certainly not going to say anything significant today. Those out of context speeches, or sorry, out of official speeches where he's talking at a conference or in front of a school of economics or anything that's not an official Fed press conference, they don't say anything important. I'm sure he could if he wanted to, but they never will because it's people aren't paying attention and it causes unfair reactions in the market. Euro Aussie is definitely on my radar for next week as we kind of start to consolidate a little bit here. I don't know what exactly Euro Aussie is going to do. Upside break should still be capped by this moving average cluster at 125.40. Downside seems open until we get down to 122.18 or so. But we'll definitely be looking for a break either way on Euro Aussie next week. I like both the Euro and the Aussie higher here. Usually when they both go up, Euro Aussie drops. The Australian dollar rallies better. But we will see. We'll see what next week brings. But Euro Aussie definitely on the radar. Pound Aussie is actually fairly similar. So Pound Aussie, we're trading right below that 38.2% fib. We're also trading here at right around this previous sort of congestion area. You can see we broke it, we got back below it, and now we're sort of consolidating underneath it. So tough to get a great trading feel for Pound Aussie. Right now, weight to the downside, looking really for 144. But if we do manage to sort of get back up above this 146.50 range, we could start to see another solid move higher towards 149. So Pound Aussie is another pair to keep an eye on next week, but it's not as clear for trading, I think, as Euro Aussie. There's not as clear of a breakout scenario for Euro Aussie. Aussie CAD could be priming for another move higher here on the 4-hour chart. As we started to stall, the decline has started to stall here at this 38.2% fib and the 50-period EMA. So we could be prepping for another move higher, really towards 109. Especially if we clear these highs above 107, I think it's a distinct possibility that the pair continues higher. A significant period of risk off may affect that, as the Aussie has probably the most to lose if we have risk off. So that's definitely a pair to keep an eye on as well. In really both directions, but the clear setup is to the upside on Aussie CAD. Euro pound. You can see reacting here off some Ichimoku support. I want to see Euro pound get above this 200 period EMA here on the 4-hour chart. That's currently at 85.30. I think if we can get a 4-hour close above there, it could prime us for a break of this previous resistance area around 85.60 and move us towards the top of this daily cloud. And from there, we'll have to see. But I do think we could see Euro pound start to move higher next week if we can. That's if we can clear this moving average and previous resistance. We have a trend line here, basically. So if we get down to 84.70, we can start to see this downtrend resume. So I think Euro pound is a great setup in either direction starting next week. We keeping a careful eye on that. But all I personally have my eye on, so if you guys have other questions, feel free to put them in the chat box. I'll take a look at them. Kiwi dollar. So keep an eye on these fib levels basically for Kiwi. 84.80, 84.20 basically are the two major fib levels. This rally was due for a pullback. I mean, the RSI got up to 87, which is the highest it's been at least since last year. So this pullback is really just most likely profit taking. So this pullback is most likely just profit taking, so keep an eye on these fib levels for the trend to resume. We also have some previous highs here, 85.30, 84.74 are both really closer to 84.80 would be two other levels to keep an eye on. That's nice because one of those levels corresponds with this 38.2 percent fib, so keep your eye on 84.80 as well. Actually, this would be a very attractive, potentially very attractive long opportunity if we get down there for another move higher. I need to see. We're very close to these all-time highs here on Kiwi dollar. I mean, relatively speaking, we're only about 200 pips below them. So that would set up to be your next sort of target for any sort of longer-term longs, just shy of 90, basically. This is pound Swiss. Last one I'm going to look at today. I would rather be long Swiss pairs than short Swiss pairs, just because I always prefer to keep the weight of the center by my side if possible. So keep an eye definitely on this trend line. next week. If we stay above it and right near it for the rest of this week, I like the potential to take a long off that trend line for maybe a breach. Basically, this 143.20 level for a move up towards 145. That of course depends on how we close the week, though. But that's another setup that I like keeping an eye on. I don't like trading a breakdown, though. It's perfectly valid from a technical standpoint. I prefer just not to be long the Swiss franc. I'm not comfortable being long Swiss franc. If the SMB decides to start talking up Euro Swiss again, it could start to really mess with some long Swiss positions. So I just try to avoid. So that's basically all I have for you guys today. Thank you very much for joining me. I hope you guys have a terrific weekend. And I will be in the chat room, as always, for a little bit longer today, and then back on Sunday. So have a great weekend. Keep your eye on these setups. I will be posting a recording of this shortly, so you'll be able to review the levels that I mentioned. But have a terrific weekend, guys, and I will talk to you soon.